All right, everybody, welcome to today's live trading session. My name is Ambrose Ebuka, as you guys already know, and this live trading session is hosted by Octa. Now, before I go into full details of the things we'll be discussing in today's session, before I jump straight into the charts, let's warm up the room. Go ahead and let me know in the chat where you're tuning in from: Lagos, Abuja, Port Harcourt, or maybe you're currently at work or school, or even on your bed, wherever you are. Let me know in the comments. I want to see the energy across the community in the chat. You can go ahead and let me know in the comments where you're watching me from. You can also tell me your name as well. And if today happens to be your very first time or your very first session with us, you can type first time in the chat so we can show you the love and welcome you to the Octa live trading session and other webinars that we usually have on this channel. Now, this is just another trading group. It's a community where we share ideas, lessons, and we grow together. And I'm also talking about the Octa Nigeria Telegram chat as well. If you're not in that, after today's session, use the link in the description to join the chat. All right. Welcome to the session once again. If you're just joining now, while you guys go ahead and type in the chat, I'm just going to run through the disclaimer. Any opinion, news, research, prices, analysis, or other information discussed in this webinar or linked to this presentation is provided as general market commentary and doesn't constitute investment advice. Now, for those of you that don't know who I am, my name is Ambrose Ebuka. I have 6 years deep experience in the Forex markets. I trade with precision and I combine swing and scalp setups to stay consistently informed in the markets. I mostly trade gold, GBP JPY, and GBP USD pairs as well, where I hit above 85% accuracy a month, and I backtest like clockwork to stay razor sharp in these markets. Now, guys, if you're just joining again, welcome to the live trading session. I'm constantly looking at the comment section and the live chat to see if you guys have gone ahead to tell me where you're watching from. I see Ayotunde from Ogun State. He says it's his first time. Welcome to the Octa webinars. Welcome to the Octa live trading sessions as well. Like I said, and like I always say with traders, learning how to trade is like 100%, right? But when you make the first step to attend one session, one educational session, you've already made 50% of the 100% step that you need to make. So whatever happens to complete that 100% depends on what you decide to do after this session. If you want to go back and take everything you learned from this session and put them into practice, you'd get good results. If you want to go back to scrolling and spending time online, you still get results as well. But at the end of the day, welcome to today's session, and I hope that you take the lessons you've learned from today's session, apply it, and become potentially a profitable trader in the future. South Africa, that's Lusu from South Africa, Cape Town, welcome. Matilda from Uyo, welcome. Guys, welcome everybody. Now, this is going to be an interactive session. It's always an interactive session with you guys, and I want you guys to always use the live chat to answer the questions and converse with me. I'm going to throw this question at you guys. How many times have you had a clean setup? You conducted an analysis, everything lined up perfectly, but the moment the markets just switched against you little, you panicked. Maybe you closed too early, maybe you added more risk, maybe you just froze and did nothing. If you've experienced that, let me know in the chat. Everything was going smoothly, and then boom, there was just one small spike that just brought your profit down a little bit, and then you panicked, you closed the trade. If you've been there, let me know in the chat. I mean, we've all been there. I know I've been there as well. And I want you guys to understand that that is just the emotional side of trading. It's not always the strategy that fails us. It's fear, greed, impatience, taking the driver's seat. Now, you see, trading is as much about controlling yourself as it is about analyzing price. Until you're able to master your emotions, the markets will keep finding ways to test you. So today, we're going to look at the economic calendar, zone trading. We'll do a dollar index analysis and correlation with other pairs, and we'll talk about the emotional side of trading. We're going to talk about how you can recognize those feelings before they cost you, and how to build the discipline that separates traders who last in the market from the traders that quit in the market. So I was asking you in the chat, if you've ever closed a trade out of fear, let me know in the chat or if you've ever held on to a trade that was in drawdown way too long because you were hoping, let me know in the chat as well. Be real about it, guys, because that's where growth begins in the markets. Let's go. Oh, I think I have a namesake in the chat, Ebuka. He says, I've been there even today. I think you're talking about the CPI, right? Well, I'm going to go ahead and give you guys a full breakdown of the economic calendar today, and then I'll talk about the movements, gold, dollar, Euro USD as well, because we had ECB news today as well. I'll break everything down for you guys. If you're ready, you can go ahead and type I'm ready in the chat. All right, guys. So this is basically, guys, give me a second. Let me increase my brightness. Okay. So this is the Octa economic calendar, and a very important and amazing tool, especially if you're, I mean, for all level traders, but if you're getting started, this is for you, right? The economic calendar, or the Octa economic calendar, basically gives you an idea of what's happening economically in different parts of the world, and you know fully well that news moves the market, right? If you're getting to hear about Forex for the first time, I'll tell you that news moves the markets. Okay, so I'm going to give you guys a breakdown on everything here. I mean, this is just, these events here are mostly the high impact events, but if you're using this calendar for the very first time, you can access this from your Octa trading app. You can also access this from the Octa official website as well. And you want to come down to analysis and education, and you come down to economic calendar, right? And then you'll be able to see everything here. Now, just a quick setup for those of you that are just getting started with this calendar. This is where you find the dates. You can see the events from yesterday, tomorrow, the previous week, today as well. You can change the time zone. I mean, you should only use the time zone that you're currently at. Okay, so if you change it to, let's say, Midway Island, you see the time changes, and then if you're in Nigeria, you'll be expecting this event by 1 a.m., right? But you want to use the time zone of your current location. And over here, we have advanced filters. Now, if you're new to this economic calendar, you can click on the medium and the low impact just for the knowledge. And then you'll see medium and low impact events will be highlighted for you. These are the popular countries where you'd want to focus on their economic events, so you can just leave this one the way it is. But for today, just to keep it brief, and because of the time we have for today's session, I will be focusing on only the high impact events. All right, so let's do a full breakdown. The first economic event we have is the RBNZ's Governor Hawkesby speech. Now, RBNZ means the Reserve Bank of New Zealand, as you can see here. I'll just give you guys a quick tip, right? One of the fastest ways you can understand an economic event is by clicking on the event and then you read what it means, right? So let's say, for example, you're finding out about CPI for the very first time. You want to know what CPI means, how you can trade it, all that. You just come to CPI, you click on it, and then you read, this is what CPI is, and then you pay attention to this last sentence. A high reading is seen as bullish, a low reading is seen as bearish. Okay? Just quick tip. We're going to get to that. I just wanted to brief you guys on that. Now, let's start with the speech. When the governor of the Reserve Bank of New Zealand speaks, it's like you're listening to the principal of their financial system, right? Their words can hint on whether the interest rate in New Zealand will stay high, will go higher, or would come down. So for example, if he says inflation is still a big problem, it means that they may raise or keep the interest rates high, and this would make the New Zealand dollar stronger. Remember, whatever news or economic events that you're looking at, you want to pay attention to the currencies here, because these are the major currencies they would impact. So this speech would impact the New Zealand dollar. So if you're trading Euro NZD, NZD USD, you obviously know that you have to pay attention to this economic event. Now, if he says the growth is weak and we must support the economy, he's trying to hint that they're going to cut the rates. And when you cut the rates, it's going to weaken the currency. In this case, it's going to weaken the New Zealand dollar. Now, even if you don't trade NZD pairs like the NZD USD, Euro NZD, speeches like this are important to you, because if New Zealand is still worried about inflation, then it can also apply to other central banks like the Fed, like the European Central Bank as well. It just gives traders a global sense of what's going on. All right. So if the New Zealand or the Reserve Bank of New Zealand's governor says the inflation is too high, obviously you're expecting the New Zealand dollar to rise. Okay. If the RBNZ's governor says inflation is too high, you're expecting it to rise, the New Zealand dollar, because higher inflation equals higher chances of keeping the interest rates high or raising them. And when you raise the interest rates, it makes the currency more attractive. I'll give you guys an example. If you were investing in the Naira and they say your returns on investment would be 25%, and you now hear that the interest rate has been increased to 35%, it would make you want to invest more, right? It makes the currency more attractive. Okay, so that's that on the Reserve Bank of New Zealand speech. The next one that we had at 1 p.m. today was the ECB main refinancing operations rate. Now, this is the European Central Bank. Before I even go into that, let me know in the chat if you guys are following. And if you've got questions, don't forget to use the live chat to ask me whatever questions that you. This obviously doesn't shock the market, but as traders, you want to ask questions like, why did they keep it there and what would they do next? As a trader, you don't just look at the decision that's been made today. You try to understand the roadmap. I'll give you guys an example, especially for those of you guys that live in Lagos. Now, imagine the downfall drivers from Ojueleba to CMX. They always charge like 500 naira. If today they charge 500 naira, you'll not be surprised, right? But if you start hearing rumors that, oh, from next week it's going to be $700, 700 naira rather, you start to prepare now for that next week, right? So that's exactly how it is. Then the next one we have here is the ECB rate on deposit facility. Now, this is the interest rates that bank earn when they park money at the ECB overnight. So it encourages the banks to either save or lend money. Now at 2%, as you can see, it's the same with the previous. Obviously tells you that nothing has changed. It tells you that the ECB is keeping things steady. No surprise, you know, the market just is just static, right? It's just a static number. Okay. Then we have the ECB monetary policy statement. Now, this is where the ECB explains the decisions that they make. The rates might stay the same, but the tone will tell traders everything. So if they say inflation is too high, they are hawkish and the euro strengthens. If they say inflation is falling, that we may cut the rate soon, the euro weakens. So I'll give you guys an example. Imagine your landlord fixes your rent at, let's say, 1 million naira, right? But they say the rent is 1 million naira, but I might increase it next year. Now you would already start reacting now because you know he has told you about the future, so you start reacting now, and that's how central traders react to the central bank hints. That's how we react to these economic events. I'm going to ask you guys in the chat, if the European Central Bank says that the inflation is their main concern, if they say inflation is our main concern, what do you think would happen to the euro USD? If they say we're focused on inflation, inflation is our main concern, I'm just going to keep it at that so I don't give you guys too much hints. But if the European Central Bank says inflation is our main concern, what do you think happens to the euro USD? Does it go up or does it go down? Let me know in the chat. If the European Central Bank says inflation is our main concern, what happens to the euro USD? Does it go up or does it go down? Okay, I'm seeing some answers, but while you guys keep the answers coming, oh, someone else says down. Okay, now euro USD will likely go up because strong inflation talk means higher rates for a longer time, which makes the euro stronger compared to the USD. Remember, if they say the inflation is too high, they're hawkish. The euro strengthens. They say it's our main concern. The more they talk about the inflation, the more they're focused on curbing inflation, the more they want to, they're most likely to raise the interest rates for the longer term. And what does it do for the euro? It gives the euro strength. So it's going to go, it would likely go up. Okay. Now to another important news, which is the one that you guys obviously like to trade. For those of you that, well, you don't even need to trade the news to have or to experience the effect of the CPI. Now, the CPI, Consumer Price Index, this YOY means year over year, right? So if you can read here, the YOY reading compares the prices of goods in the reference month to the same month a year earlier. So it's comparing it to August last year, okay? August 2024, right? So what it means is that this was the report 2.7. That was what it was August 2024, okay? All right. Now, the CBI shows you how prices rose compared to last year. It came in at 2.9%, which was exactly as forecast, but higher than last month's 2.7. What it means is that inflation is still creeping up. Now, for the Fed, it means they may keep the interest rates higher for longer, which would most likely support the dollar. I'll give you guys an example. If a cereal, a grain was, let's say, 200 naira per cup last year, and now it's 260, even if you expected it to be 260, it's still going to hurt your pocket, right? That's what CPI is. The CPI is basically the pain index. So you guys answered well. I mean, you guys participated well with the last question, which has moved me to ask you guys another question, and this one is about the CPI. If the inflation in the US keeps rising, as you can see, if it keeps rising, do you think the Fed will cut the rates or will they hold them high? Let me know in the chat. If the inflation in the US keeps rising, do you think the Fed will cut the rates or they would hold them high? Let me know in the chat. You can say cut rates or hold high. Okay, if it says hold them, Glamini says hi. I'm hoping I got your names correctly. Moraka says hold them high. Ebuka says the rate would cut. Okay, they will hold them high. Rising inflation means they can't risk cutting or else the prices will run out of control. All right, I just want you guys to understand that. So if you said hold them high, correct. If you said they'll cut the rates, now you know what the correct answer is. And it's good that you guys are participating so that you learn. It's a good thing. So we have the Consumer Price Index X food and energy. X food and energy means excluding food and energy because these are too jumpy, right? Food and energy are too jumpy. Now, it's basically still the same 3.1% from, you know, this same time last year. What this shows you is that the inflation is not going away easily, it's sticky. So even when you remove the wild items, the volatile items, the cost of living is still high. Let me give you guys an example. Now think of, let's say, school fees. Even if the the fuel price changes, school fees are constant and still expensive, and families still feel the pressure. Let me know if you guys got that. So it's at 3.1%, which was the same with the previous at this same time last month. And I mean, the core inflation is still at 3.1%. If you are the Fed, obviously you'd want to keep the pressure on because 3.1% is well above their 2% target. The Fed has a 2% target for inflation, so they won't relax yet. Then we have the Consumer Price Index, excluding food and energy, month of this one is the Consumer Price Index on a monthly basis, and it also stays steady at 0.3%. I mean, when you're looking at it this way, guys, it looks like it's calm, but 0.3% each month rather, builds up. So it adds up to like 3.5% per year, and that's still above the target. Let me give you guys an example. If the price of fuel increased by 20 naira every single month, you might get used to it. Okay, it's just 20 naira. But at the end of the year, that's 240 naira more per liter. And it's painful. So obviously the markets would worry. 0.3%. The market will worry. And then we have the consumer price index month over. This one is the bigger shocker. You know, the prices jumped 0.4% in just 1 month, and this was higher than the previous 0.2% and the forecast 0.3%. This tells traders that inflation is not calming down, it's heating up again. It also tells you that the Fed cannot cut the interest rates soon. It's just like saying you go to the market and then, you know, last month the price of tomatoes increased by 20 naira. Then this month it increased to 14 naira. I mean, even if you expected 13 naira increase, this 14 naira increase that actually happened would shock you. Okay, it's gonna shock you. So, this is just a brief explanation for majority of the events that we had today. I think we have one more, the ECB press conference, which has already happened. It's a very unpredictable event. You know, the European Central Bank president answers the journalists live, and if they make, and this goes for any press conference for any central bank presidents, one wrong word, the pair can move 100, 200 pips. All right, I'm just going to give you guys a breakdown of what really happened today. So the European Central Bank met today. They did not change the interest rate, left them at 2%. But the interesting thing comes from this press conference. They said the Eurozone economy is stronger than expected. Inflation, you know, the price increase, the inflation is now close to their target of 2%. They even raised their growth forecast for 2025 from 0.9% to 1.2%. And they basically told everyone, we're not going to rush to cut the interest rates. We're going to take it meeting by meeting. Now, even though the 2% number did not change, what really moves the market, guys? Remember, what moves the market is the tone. And today's tone was confident. Okay, today's tone was confident, and this is good news for the euro because it tells you as a trader that the Europe in itself is not as weak as we expected or weak as we feared it to be. The inflation is under control, and the European Central Bank is not rushing to cut the interest rates. All right, so we're going to go to the charts and look at how this would influence the domestic currencies and also other major pairs as well. But if you guys have any questions, please let me know in the chat. I want to answer your questions before I go over to the chart. But what you can take away from this economic analysis or economic calendar analysis is that the euro is supported by confidence. The euro could rise against the US dollar. The dollar seems a bit pressured because, you know, the ECB is steady. Gold is still attractive in the long term. Gold is still bullish in the long term, but the short-term moves on gold that you would see would be dependent on US dollar's strength. Okay, but overall, gold is still pretty bullish. If you understand, let me know in the chat, and we're going to go over to the technical aspects of today's session. In our last session, I told you guys that as long as the dollar keeps trading below this key level, I highlighted it for you guys. Let me just zoom out a bit. Let's give that a second to load. I told you guys, as long as the dollar keeps trading below the zone, it's still pretty bearish, and that's what's been happening with the dollar. It's still trading below this zone that I highlighted here. We also had this pattern, and you know, the dollar keeps pushing lower. The dollar is still pretty much bearish right now, and we're already seeing how that affects GBP as well and Euro USD as well. I always tell you guys, when you see the dollar, you know, heading downwards, shooting downwards, you capitalize on that move with major pairs like GBP and Euro. Sometimes not gold, because it doesn't always work like that with gold, but mostly GBP and Euro USD. You guys see the analysis that we conducted on GBP USD as well, and how the market obviously started bouncing off from our key levels. Now, if you don't know what this is, if you don't know what everything that you're seeing here, the lines and all that, if you don't know what it is, I'm going to explain it to you guys. It's called zone trading. Now, imagine the market is like a war front, a battlefield between the buyers and the sellers. That's basically what it is. But imagine, just picture that in your mind. Now, instead of trying to predict every single move, try to predict every candlestick, all you just have to do, which is what zone trading is focused on, or is more about, you focus on identifying the areas where the buyers and the sellers are likely to clash. And that's why you see these minor zones that we have here and these major zones that we have here. You can see we identified this zone. This zone started from here, and you can see the clash 1, 2, 3, 4, 5. Even when it broke above, it came back down to clash again to find support, broke down, came back up to find resistance, another clash, another clash, another clash, and now coming for another clash as well. These zones are not single price like psychological numbers or just single price points. They are zones like this. They can range from, as you can see, the zone I put here, 1.315 to 1.33. That's like a 15 pip zone. You have to see them as a territory, like a point of interest, a territory of interest where big moves might tend to happen. Now we have the demand zone, which is the buy zone. And then we have the supply zone, which is the sell zone. The demand zone is where buying pressure is strong. The supply zone is where selling pressure, like you can see here, selling pressure is strong. You know, the bears are saying this is too expensive, it's time to sell. And price tends to drop from that supply zone. So that's just a brief explanation to what you see on here. One of the ways you can trade the zones is to wait for the price to get into your levels. Now, all these lines that you see here, they're called key levels. The key levels, for me, I use my trend lines, I use the horizontal lines, the moving average, Fibonacci, support and resistance as well, to identify these key levels. And one of the ways I do that is I go to the higher time frames. I even start from the monthly. I don't do much on the monthly. I just look at what's happening that month and what happened the previous month. So I'm going to take you guys to the most recent price action. As you can see, even on the monthly, I had some really nice. We've been trading GBP USD for a very long time. If there are any other pairs you guys want me to analyze, let me know in the chat. I'll just do that briefly as well before the session ends. Now, for the month of August, you can see GBP USD was pretty bullish. September started off, you know, bearish. The bears took us down a little bit, but you can see that the bulls are pushing and has pushed above the opening point of the previous month. And we are now testing the highest point of the previous month. You can clearly see that this month so far, GBP is bullish. That's what I do. I just go to the monthly time frame, look at what happened the previous month, look at how the market is reacting to that, and look at what this month is doing. Push back down from this resistance level. Last month, pretty bullish. This month, we're still following up with that bullish momentum. All I want to do is to capitalize on that on the lower time frames, right? So as long as the dollar stays weak, all I'm looking for on GBP USD is buy opportunities. So I come to the lower time frames and I start to identify these levels where the market would have potential retest. You know, the market would have potential liquidity grabs, and I take advantage of that. What do I use for my entries? The final point of my entry is candlestick confirmation. I could do an analysis right now, but if I do not see momentum in candlestick from the 15 minutes or the 5 minutes time frame, just like we're seeing here that GBP USD is going for another retest, obviously this is not a good time to start hopping on trades because we are already close to this key level, right? the idea of trading in the zone, or the idea of zone trading, is basically not to go ahead of the market and expect it to get to this level so you start buying. No, you want to see how the market acts on a key level like this, and then you react. So for example, bearish momentum, the bulls were not able to take this out. Continuous bearish momentum, can just capitalize on this to this key level for about how many pips? Let's see. Instead of giving us about 90 pips, right? Just because you understand that this is a major level for GBP on the daily time frame. We got rejection, no bullish momentum to take it above. Continuous bearish momentum, you can just put your stop loss right up here. That'll be about 40 to 50 pips. Give you a nice 1 to 1.5, 1 to 2 risk to reward ratio if you want to trade it all the way to this swing or even to the downside here as well. But again, the idea is to look at what's going on at the key levels here, here, and currently now here, and react to whatever the market does. Remember, we have liquidity at the top side for GBP USD. So you can't just possibly start saying, because we bounced here and bounced here, we'll bounce here again, I'll start to trade it to the downside. No, you want to see if the market can show you that bearish momentum. Today is already bullish, would most likely close bullish, but we want to see that happen. We want to see GBP USD break out of this resistance. The more price tests a resistance level, the stronger it becomes. And now we're having the third test. This is the fourth actually, after this break to the downside. So if we successfully break above this level, all I'm doing is waiting for that pullback, and I'm capitalizing on buy opportunities on GBP for a potential retest at this previous high. All right, but again, I always tell you guys, pay attention to the key level, pay attention to the area of interest, and react to the markets. If you're understanding, please let me know in the chat. And like I said, if you have any pair that you want me to analyze, you can also go ahead and type that in the chat as well. I'll be looking at those pairs for you guys. I'll just quickly do gold. I know a lot of you guys like to trade gold as well. Guys, gold is moving wild. And in our last session, I told you guys, I mean, we basically saw this happening, right? We saw this happen, rather. Now, gold created its all-time high since April, right? And ever since this all-time high was created, we're trying to get to that level. We're trying to grab all this liquidity. We're trying to get to this level. We're trying to test it. We did multiple tests on this level. I mapped that out, and I told you guys, the tests we're getting on this level is really wild. And for whatever reason, if gold breaks above this strong level, it's coming for another retest at the all-time high. That happened. We still had a break out of that all-time high, a pullback, a retest to the all-time high resistance, which has served as support, and continuous move to the top side, creating multiple swings and creating multiple highs, and now a new all-time high at 3674 basically. So you guys can see how your understanding of supply, demand, your understanding of support and resistance as well, breakout and retest, can give you good opportunities to capitalize on moves in the market. And not just that, you also want to combine that with understanding fundamental analysis. Dollar is pretty weak. Dollar has been weak for a very long time. Obviously, with all the tension going on around the world, gold serves as a safe haven for investors as well. Gold has been doing pretty good. Breakout, nice. Breakout of all-time high, nice. We're not seeing any single momentum or any single bearish momentum here. This would have served, everything that happened here would have served as a reason for gold to lose this bullish momentum. But with the consolidation and all that, it still broke out. So we're going to see gold, stay up for longer than we think. I mean, for the rest of this week, gold is going to be up. There'll be no reason to look for buy opportunities on gold, or sell opportunities rather on gold at the moment. We're still pretty bullish after this nice breakout. gold is going to trade above here for a very long time, even potentially continue to break to the top side, but we'll see how that plays out for the rest of the month. Let me go to the monthly time frame and show you guys why I strongly believe that gold is bullish. Can you guys see that? No bearish momentum whatsoever. No bearish momentum whatsoever. We're not even seeing something like this or this. Bullish, 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 bullish. All right. And what do you want to do in that kind of a market? You don't want to be you don't want to be caught on the opposite side of the market. In a bullish market, you want to find bullish opportunities. This is not to say that you can't make a profit if you sell, but why are you trying to sell in a bullish market? Why do you want to go for short-term gains where you can be patient enough to use that pullback to capitalize on more long-term gains? All right. So that was the analysis on GBP USD and gold as well. And the dollar index, like I said, guys, the dollar index is still pretty much bearish. I've given you guys the indications and the price areas where, as long as we keep trading below that level, dollar is still pretty much bearish. We're not looking for any buy opportunities on the dollar at the moment. I'm trying to load it up to show you guys the levels again. Okay, so as long as we keep trading below this level, still bearish, still bearish. If we get above, if the dollar manages to get above up onto this level, then we can start considering a potential break, and then this will serve as a triple top for us. For those of you that are familiar with the triple bottom, rather, the triple bottom pattern, which is a reversal pattern. And then we get to the neckline. This is going to be the neckline. Then we get a nice break and then change in trajectory. But if none of that happens and we continue to trade below this level, it's all bearish for the dollar, which, you know, I believe the dollar is going to come down to make a retest at this point in the coming weeks. All right, guys. Now, if you've got questions, please let me know in the chat. We're about to get to the question and answer session. I mean, I've been asking you guys questions, so it's time for me to get your questions. So you can go ahead and type your questions in the chat if you have questions for me. And while you guys ask me your questions, I just want to quickly run through what I told you guys we're going to discuss about the emotional side of trading, why your feelings can make or break your trades. So here's what I want you guys to understand, right? Trading is not just charts analysis. And this is why emotion in trading is important. Your mindset is the biggest driver of success or failure. And if you cannot control fear and greed, even the best strategy might fail you. For example, you can know support and resistance, but if you panic sell too early or panic buy, the market will still win. So what are these emotional aspects of trading? What is involved with the emotional aspect of trading? Now we've got fear of missing out, fear of, you know, closing trades too early, fear of pulling the trigger, executing the trade, analysis paralysis. All these things are under fear. And then we have greed, over leveraging even after you make a good trade, refusing to close a trade because it will go further, doubling your lot size to take quick profits. Let's say you make $500 in the market today, and instead of stepping back, you enter again with a bigger risk to make $5,000, and then you end up losing $1,000. Now you lost the profit you made and even your own money as well. And then we also have an interesting one. Most beginner traders do this one a lot. Revenge trading. After you draw down, you jump back into the market with zero plan. Imagine conducting an analysis for like 30 minutes and for some reason it goes against you. And then with no analysis, you just go back and you're like, okay, let me just trade this one. trying to get back the money instantly, it could lead to bigger drawdowns. And finally, overconfidence. After some profits, you start to feel like, oh, you're the master of the market. You know, you start to ignore your plan. You start to take random trades out of pride. The market is still going to humble you. So how do you control your emotions? Always use a stop loss. Trade only what you can afford to risk. Journal your trade. Learn from mistakes. And if you have drawdowns, if the market goes against you, take breaks. Guys, trading is 20% strategy, 80% psychology. If you can control your emotions, you can control your results. Your edge is not just in the charts and your strategies, it's also in your mindset. But let me know in the chat, guys, what emotion do you struggle with the most? I mean, I talked about fear, greed, revenge trading, overconfidence. If there's more that I didn't mention, let me know in the chat. What emotion do you struggle with the most? And if you haven't already, use the link in the description. There's going to be a link in the chat as well to download the Octa trading app. It offers a wide range of trading instruments with low spreads, fast execution, and zero commissions. It also has various educational resources, 24/7 customer support, and a strong commitment to funds and data security. Now, if you made it to this point of the session, congratulations. You now have the promo code that can give you a 100% bonus on your deposit. All you have to do is use the official website or the Octa Trading app. Go to your profile, find the promo code section in the menu or the navigation button, type in Ambrose E100 and click on activate. You can make your deposit and enjoy your bonus. Congratulations. Now, we're now at the Q&A section of today's live trading session. So if you've got questions, I'm checking to see if you guys have any questions for me, and I'll answer your questions. Ayotunde says emotional struggles like greed, revenge trading, and fear. I just gave you some tips on how you can overcome that and how you can be better. I'm hoping you put that into practice. And guys, if you want to watch this video again, you can always come back. It's going to be here on the Octa Broker YouTube channel. You can always come back to watch it and, you know, relearn, refresh, and if necessary, restart. Okay. Ebuka says revenge and fear, no greed. If it says fear, okay. Remember, guys, I gave you tips on how you can overcome that. So I'm hoping you put that into practice. I'm taking questions now, guys. I'm taking questions. This is from Sadiq. Do you use multiple time frame? A higher time frame for market direction and lower time frame for entry? Yes, that's what I do. I use higher time frames for direction, overall direction. It's clearer, it's smoother, you know, it gives me what I need. And then lower time frames for entry, just because I'm a day trader and I can't be executing trades on the monthly time frame. That's going to take a long time. The promo code is Ambrose E100. Someone's asking for the promo code Ambrose E100. That's the promo code. What trading strategy are you using? I'm using the zone trading strategy. That's what I've been using for a very long time. Pretty simple, not complex. Supply and demand. Simple. Let's see if we've got any other questions. This is unlike you guys. I always get questions. I'm going to assume that today's session was very, very comprehensive. How can we learn the zone trading strategy? So I just explained it in this session about how the market is like a battlefield, how you identify areas of supply and demand in the markets. you can rewatch this video, and you can also check my other videos on the Octa Broker YouTube channel. You can see the live sessions there as well. I always go through the step by step on how I start from analyzing from the higher time frames to the lower time frames, you know, the framework that I use. You can also check this as well. This strategy consists of the understanding of market structure, identifying the key levels, predetermining your entry and exit points, and risk management. Okay, so understanding the market structure is basically getting an overview of the market with the candlestick charts, you know, the patterns, the trends, the ranges, supply and demand. Then you use your trend lines, your moving average, your Fibonacci, your horizontal lines to identify the key levels where the market tends to retest. Let me give you an example of what a key level would look like in a Nigerian situation. Now, let's say dollar to naira is 1,500, right? And then it gets to 1,800, and then it gets to 2,000. 1518 2000 per dollar, and then it drops to 1.6. Would you buy at 1.6, or would you wait till it gets to that 1.5 before you buy? Most people wait till it gets to 1.5 because, I mean, the moves are there from 1.5, right? So most people will be more confident. They'll be like, well, it was at 1.5 before. I don't want to enter at 1.6. Just want to wait till it gets to 1.5 so I can buy more and keep more. And if it goes higher again, I make more profit. That's basically how it works. What's the winning rate of the zone trading strategy? So I don't think that any strategy has a 100% guaranteed win rate. I think that all strategy works and all strategy doesn't work. And I say that because it all depends on how you use it, right? How you use it, when you use it, and what you use it for. Okay. So it depends on how you decide to apply it. The time frames are also important. What sessions are you using it on? I mean, the zone trading strategy applies on all time frames and for all traders, just because in every single time frame there's always a zone. But if you're the kind of person to always go ahead of the markets before it gets to the zone, you could have complications. You can always check the previous live trading sessions I've had with Octa in the YouTube channel. Look at the analysis that I did on there. You can backtest that and see what the results was like. But I think buying at 1.6 is fine because it's a retest. I might not come back to 1.5. So if you went to 2,000 and it came down from 2,000 to that 1.8, from that 1.8 to 1.6, come on now. Everybody's going to think it's going to come down to 1.5 again. Like so this market is basically, I'm not saying everybody's going to wait for it to get to 1.5. Most people buy at even 1.7, but majority would wait at 1.5. Like, that's fact. If the naira started from 1,000, got to 1.5, got to 1.8, got to 2,000, I started dropping again, it dropped to 1.8, dropped to 1.6. Most people wait at 1.5. Most people still wait at 1,000. There are people waiting for Bitcoin at 20k right now. You know, the people still expecting Bitcoin to drop at some certain demand level. So majority will just wait at that 1.5. Emmanuel, I mean, you might want to do 1.6, but we all know majority will wait at 1.5. So that's just a brief explanation to how supply and demand works. Okay. Alrighty, guys. I'm not seeing any other questions, so I'm gonna wrap up today's session. And before we wrap up, guys, take a moment to fill out our survey. Scan the QR code on your screen, or use the link in the description. Your feedback is essential for us to improve our future webinars. This survey will take only 1 minute of your time. Again, it's essential for us to improve our future webinars. All right. Now, before we wrap up, remember this: the market will always test your skill, but it's your emotions that will test your character. Strategy can make you money, whatever strategy it is, right? It can make you money, but only discipline will let you keep that money. So in this market, don't just fight for profits, fight for control over yourself, because the day you master your emotions is the day you stop chasing trades and you start letting trades come to you. Thank you guys for joining today's session, and I'll see you all next time.